topic, we will be discussing about the stock market. Obviously, there has been a lot of movements in the stock market in 2020, and the expectations are that we are set for a volatile 2021 as well. So a little bit of an introduction about myself before we continue any further, but in this bit, stay tuned with me because we will be discussing several different stock strategies in this masterclass, and I will walk you through the full agenda for this particular masterclass. So my name is Naeem Aslam. I come with a wealth of 15 years of trading experience. During this period, I have worked as a hedge fund trader for Bank of New York Mellon and in equity trading with Bank of America. Currently, I work as a chief market analyst for AvaTrade, and all the content that you see on our website, avatrade.com, and of course on our YouTube channel, which, by the way, I will show you in a bit, is all done by myself. Now, before we navigate into this territory further, I wanted to ask you guys a few questions. I wanted to understand the level of knowledge from you guys, that what sort of where are you in your journey of trading. So first of all, in a series of 3 questions, please say yes or no if you have attended any of my previous webinars. There you go. So we got a few familiar names are coming in, and then some of them are certainly no. So there's some new and old people, as you can see over here. They're really here. So congratulations to the ones who are attending again, because it is always a reaffirmation, reconfirmation of the strategies that we really talk about in this particular webinar. And of course, the technical aspect, the analysis aspect of that webinar is always different, and that really sort of helps you to further strengthen your view about a particular stock and its support and resistance zone. Please feel free to share some of the stocks that you will also like me to have a look at it, that are available on our platform, and I will be more than happy to help you with respect to that. Now, the second question is, if you have been trading less than a year, please say yes. So less than a year, if you've been trading, then say yes. Okay, so I see a lot of people who are literally at the beginning of their journey. Now, please say yes if you have been trading for over 2 years. Okay, so I do see some people who are they are experienced to an intermediate level, and they're really trying to learn. So that is really great. So that is all what I kind of wanted to ask you guys. Now we will begin the webinar. And then as we go along, I wanted to keep this one very interactive, and I wanted to make sure that you guys get the maximum out of this webinar. So before we do anything else, as always, it is important for me to go through this disclaimer. Anything which will be discussed cannot be perceived as an advice. Looking forward, please do consider consulting with your own advisors. Now, the contact details, why it is important. Folks, I cannot stress enough, and the people who have attended the webinars before, that they will know that I am a big fan of Twitter, because Twitter is the best way for you guys to have all the information directly notified on your phone. So while you are trading euro dollar, sterling dollar, Japanese yen, or if you are trading Dow Jones, S&P 500, or the DAX, the FTSE, whatever you are trading, when you see that sudden move either to the upside or to the downside, there are always fundamental reasons behind that, which are driven very much by the news, which could be, which would have come out at that time. So if you are on Twitter, you can get all that information straight and directly on your phone without wondering that, okay, why all of a sudden we are seeing massive move to the downside to crypto, or why are we seeing the big sell-off in gold prices, or why oil prices are moving higher, or because they were trading in a sideways pattern, but now we see a big spike to the upside. So if you wanted to learn all of that, the best way to do it is to be on Twitter, create an account. If you don't have an account, write down on the paper right now that you want to have an account on Twitter. And when you do, follow us on Twitter. My Twitter handle is right in front of you, which is at Naeem Aslam 23, all one word. And then AvaTrade is obviously for AvaTrade. In addition to that, what we also have is YouTube channels. On YouTube, AvaTrade's channel is obviously called AvaTrade, and my channel is called Naeem Aslam. What you have on these two channels is daily fundamental updates. So very small, easy, digestible summary of the market, why the market is going higher, and if it is going to continue to the upside, whether we will see a reversal. All of that sort of information, along with price levels in less than 2 minutes, is very much packed in our daily YouTube live session, which takes place between 9:20 to 9:40 a.m. London time. So make sure that you are tuned into those ones. And if you haven't subscribed to our channel, smash those subscribe buttons, which I will show you in a bit, and then you will get all that information straight away. And then secondly, what I also produce is a technical analysis video. So let me just show you, put you a little bit more color into that so that you can really understand what we're really talking about. So on Twitter, as you can see, this is the channel. Again, follow. If you are on a Twitter, smash that follow button, and then you'll get all the information. As you can see, this is less than a minute video, but it gives you all the information. This is the link for the technical analysis video about Bitcoin, which is in a very much in a consolidation zone. And the question is if this consolidation in Bitcoin is good, or whether it's not good. And then throughout the day, you can see there are several tweets. Now, as for AvaTrade, what you do with respect to AvaTrade is you got to make sure when you go over there and when you type, let's say that over here, let me just see if, I should have. So when you go over here, you type AvaTrade right over here, right? So you gotta make sure that you're following the right account, the one with the ticker, with the blue ticker over here, because obviously we are verified on Twitter, and more importantly, you will see me somewhere around here, talking about the market, which the video would be kind of similar to what is on the other Twitter account. And then throughout the day, you will see several different tweets going on our Twitter account, which is could be very useful for you guys. Now, on YouTube, again, when you type that these two words, Naeem Aslam, the first account which will come would be right over here. And you should also see a subscribe button over here. And once again, smash that subscribe button, because then you will get all the information. Like this was a YouTube live which was done earlier, and this is your technical video. Similarly on here, when you are following, type AvaTrade. This is AvaTrade's account. Subscribe that, smash the like buttons as well, and on a daily basis you will see all the videos going up here as well. So now let's get back to our agenda. Let's go back to our presentation. Now, AvaTrade has a unique technology, just a little bit about that. AvaProtect is a revolutionary one-click risk management tool available on the AvaTrade web trader and AvaTrade Go app. With AvaProtect, you can purchase protection against loss for a defined period after opening a position. So if the position ends and you have an open position that is losing, AvaTrade will reimburse the loss directly into your trading account. The only cost is the AvaTrade Protect fee. Now, how a client can activate this: type the web trader and AvaTrade Go app, select the instrument, click on the AvaTrade Protection Act, choose the protection duration, see the fee and the expiry date, and complete the trade. It is available on FX, gold, and on silver. Now, as for today's agenda, what we will be looking at is we'll be measuring the indices, we'll be measuring sectors, and then we'll be looking at still some special COVID stocks in the following sectors. In streaming, we'll be looking at Netflix and Disney Plus. In the airline industry, we will look at Boeing and a few other airlines as well. In pharmaceutical industry, we can look at Johnson and Johnson and Pfizer. Online retailer, it is all about Amazon, eBay, and Alibaba. In the energy space, we will look at Chevron, Exxon Mobil, Shell, and Total. Finally, in the banking, I will look at Bank of America, Citigroup, Barclays, and Goldman Sachs. Now, the first thing first, we gotta know which is the strongest index and which one is the weakest index. But before we continue any further, I just wanted to make sure that you guys are with me so far. You guys understand the importance, and then you guys are making sure that you are subscribing to our social channels, which are Twitter and YouTube accounts, because guys, there are nearly 70-80 people over here, and then it'd be shame if you guys do not take proactive approach, because taking proactive approach is the best practice that you can really do. Because if you just say that, yeah, I'm going to write it down, I will do it later, trust me, it will not happen. The chances of that happening will be less than 10%. So once again, it is very, very important for you guys to make sure that you guys are following that. Now, measuring with respect to the measuring indices, once again, we're going to look at the daily time frame for three different indices, for the Dow Jones, S&P, and the Nasdaq. And then all what we wanted to see is where the prices are trading on the curve. Now, the curve being, this is your where is your lowest low, where is your highest high. When you join both of them, that becomes your curve. Now similarly, the moment that you will start coming out of the chart, this becomes your lowest low, this remains your highest high. Now if we see that, we wanted to see that where the price is trading in. If this is your highest high right over here, this is your lowest low, and this is where the price is trading right now, we can clearly tell that the price is trading towards the highs. And what that is one thing. And secondly, what we wanted to see is where the price is trading with respect to its moving averages. This is your 50-day simple moving average, this is your 100-day simple moving average, and finally your 200-day simple moving average. Now, if any of these ones, like here, that start to break below the 50 and 100-day moving average, that give us a confirmation that, look, now it is worth for us to get back into the position, look for long positions, because S&P 500 index is under tremendous pressure. But we have not seen that. What we have seen is two price levels where they have touched the 50-day simple moving average fairly quickly, and this indicates to me that, look, the retracement is coming. Now, with respect to the Dow Jones, we're going to do exactly the same. So this is the low of the curve, this is the high of the curve, meaning the highest high on the price, and then the price is trading very, very close to the highs of the index. So it will show us that, okay, the upside move is very little in terms of this particular index. So what we want to do is we want to have our support zones ready, and then make sure where our where the price can really follow to. Now, as the S&P 500 index, the Dow Jones is also trading above the 50-day simple moving average, above the 100-day simple moving average, and also above the 200-day simple moving average. So in terms of strength, S&P and the Dow Jones, they are very, very similar. Now, when we look at the Nasdaq index on the daily time frame, things are going to look slightly different. The reason but that is for the things to look slightly different is because price is really in a sharp downward trend, because as you can see that the price touched the 50-day simple moving average, but the distance of this touching the S&P 500 index, and then now again the price is coming towards this 900 index, is really showing that investors and traders are not paying, they do not have too much love for the tech index, which is very much in line with the overall market sentiment. Does that make sense? Now we have classified that the Dow Jones and the S&P 500 indices, they are strong indices. But as for the Nasdaq, it seems like that there could be some more tougher selling pressure could be coming in terms of this particular asset class. So before we continue any further, it is important for me that you guys understand. Okay, someone saying no sound and no picture. I think, Andreas, it's just your issue because everyone else has a sound and everyone else has a screen as well. So I think it's just maybe something on your end. Try to log out and log back in. Now we are going to go through all the stocks that we discussed earlier one by one. All right, so let's begin by looking at Tesla. Now, when we look at Tesla, obviously this particular chart is not really great. The reason for that is because it still hasn't, shown the stock split, which really happened for Tesla, and then it is showing us that look, the all-time high was still over here, when that is not true because the prices are forming the all-time high as they formed an all-time high yesterday. So for the right chart for Tesla, what I'm gonna do is I'm gonna bring out this is Tesla. No, this is something else. Tesla. There you go. Now I'm going to bring out the Bloomberg terminal and then I'm going to show it from here. Now, clearly that the prices are trading above the three important moving averages, which remain the same, 50, 100, and 200. The only difference is that in this case, this is yellow and then this one is green. So we are seeing a momentum to the upside. We are seeing consistent move to the upside, given the fact that we have no precedent in terms of Tesla's price, meaning we have no area where we can say that the prices are likely to continue the journey to the upside. So we're going to assume that the next psychological resistance for this one is going to be near the $1,000 price level, and then that is the area where we could see some further pressure coming in. But as for the support zone area, we are looking between 586 to 666. If the price reverses its direction and it comes back into this area, that could be what I believe could be really great strength. So if let's say if the price comes back in here, in around these particular price levels, that could be really, really good level to look at. Now, the next stock in terms of that, let me just delete this one because this doesn't really go anywhere. It just stays over here. Erase all drawing. Now, in terms of the next particular stock, what we're really looking at is we're looking at Bank of America's weekly chart. Now, Bank of America is once again entering into its major resistance zone, which was formed back in 2019, which is right over here. Now, clearly, the Bank of America has moved for the last 2 days. They have been absolutely parabolic, because the prices have started to rise sharply. So what we really expect from this particular chart is that this move that we are seeing is likely to get exhausted as we approach near $13. So that is the fair price that we could say that the fair price for this one for Bank of America could be somewhere in around this particular area, meaning $29 to $30 is your mean with respect to Tesla. Now, Similarly, for next stock, which is your Netflix, the prices are trading above all the three important moving averages, which is all good and good. But in terms of resistance, we need to do something else. Now, in terms of a resistance, what we really need to do is, first of all, define the resistance with respect to Netflix. And what I'm going to do is I'm going to move these lines. I'm going to bring them right on the top of this one, and I'm going to leave my support zone where it is. So the support zone for Netflix is going to be between 457 to 467. And this is the area where the 50-day simple moving average is also trading. Now, of course, if the price comes into this area, then we can really be happy. We can say that, yes, this is a buy trade. But at the same time, if the price does come into this area of resistance, we can say that, yes, this is a good trade with a good odds and prices are likely to reverse, because historically speaking, it has worked quite a number of times, and it should work for this particular asset, for this particular Netflix. It should also work next time as well. Now, the next one, which is Amazon. One thing which is very, very clear by looking at the daily and the weekly chart with respect to Amazon is that we have been in a very, very strong consolidation zone. The prices are not moving higher any further. And this means we need to readjust our support zone to a level of a greater uncertainty. And for that, I need to move this one from 269 all the way to, let's say, 200 and sorry, 2,948 from 2,887. So that is my first level of support. This is where I wanted to see for the prices to reach and then perhaps bounce from here. In terms of my resistance, I will not take any profit until and unless the price has touched the top of these particular candles, which is right over here. And then, as always, because this is a resistance, you can change the color from green to your favorite color, which is red, because red represents mainly about sell-off and green represents usually about the bounce back, so which is your support zone. So now I'm going to change them into my resistance zone right over here. Sorry, not the pink one, into red. So now you can see that this is my support zone, this is my resistance zone, this is my 200-day SMA, this is my 50-day SMA, this is my 50-day, this is my 100-day SMA. Price is finding its weakness, but the chances are that it may bounce from here. So Amazon turns out to be very, very good trade, a lot of odds behind us with respect to that. Now, we're gonna move on to the next one, which is Johnson and Johnson on its weekly chart or on its daily chart. So from the daily chart perspective, what we really want to see is Johnson and Johnson's prices staying above these particular price levels. So let me mark them on the chart. So we don't want the price to cross below these particular levels, because if it does crosses below this level, then it means that this is going to reverse and the sell-off is likely to become even more intense. But for now, I can say is that the price given by Tesla on this particular trade is nearly about 151 to 152, and the resistance remains right on the top of this ladder. Now, similarly, for Boeing, when we look at Boeing, obviously a lot of fundamentals are shifting with respect to Boeing because the airline industry is under massive threat. People are not traveling, people are not likely to travel at the same pace as well, like they used to do before COVID, because a lot of work is now being carried out on Zoom. And that among investors and traders remains a concern. So Boeing has been under tremendous selling pressure, as you can see over here. on the weekly chart, but let's focus on the daily chart. And on the daily chart, what I really see is that the price is losing its momentum. After going into this area of resistance, which we mentioned last time, the price literally just went out slightly out of that range, and which should be taken care of for your stop loss. Now the price is really tracing back towards its 50-day simple moving average. And it seems to me the price is really going to break these particular price levels, and the next level of support is going to be the gap somewhere in around where the 200-day simple moving average is trading. So this is the price level that we would be really looking at in terms of price. Let me just move this one a little bit below. So 168 to 174 is going to be our support zone. And with respect to resistance now, again, we can fine tune that resistance level from 244 to 231. But right now, if the price stays above the 50-day simple moving average, you can put your stop losses just below the 200 price level, and then let the price run once again towards these particular price resistance levels, and then start taking profit as the market goes into that. But this is really a good sort of a trade that we are really looking at right now, and is certainly it makes a lot of sense by looking at this particular price. Now for Goldman Sachs, because we are running very much out of time, so we have to run a little bit faster. On the weekly time frame, what we are seeing for Goldman Sachs is a consistent rally, consistent move to the upside. That is what we're really seeing. In 2020, during the crisis, the price went below 137. Now prices are nearly, well above those particular price levels. We are talking about, the price where it has gone well above the 300 price level. So literally, more than doubling those movements. And now retracement is very, very much due. So the resistance in terms of Goldman Sachs price level, I would say, is going to be just where the price is really trading right now. And that is going to be between 308 to 304 perhaps. And the support area, the minimum support that I would like to see for the prices to come to, is going to be between 248 price level to all the way, shall we say, in around about 247. So that is our support, and this is our resistance, because obviously I can assure you the RSI is also way oversold, overbought as well. So a resistance is coming. So this is again a good trade to short, a good trade derivative to short. With respect to Google, the consolidation is very much continuing with for Google. We're not seeing much movement. We're just a sideways price action that is happening with respect to Google. And what we wanted to see is the prices continue to retrace and then come into the area of support, which is between 1467 to 57 to all the way to 1506. So this is my area of support where the 50-day simple moving average is really trading. And in terms of resistance, what I want to see is the prices that there are chances that we may see the prices, moving somewhere in around, let's say, 1838 to 1864. So that is a resistance level that I'm really looking at. So again, there is no particular trade with respect to Google. It is a very much of a wait and see. With Walmart, we are seeing a bullish momentum because the 50-day simple moving average is crossing above the 200-day simple moving average. And by the way, if you have a chart like that which comes up with the black, and I have this one purposely, all what you have to do is go over here, change the background to white, and then bar up, bar down should be red, just like over here. And then bull candle should be green, because obviously we're talking about bullish candles. And then bearish candles should be red, because we are looking for that. And then press OK. Now you can see that the chart has turned into a lot more familiar, something that you will understand it by looking at it, but the numbers over here are not there. And the reason for that is because when we change the foreground is also black. Now we need to change the foreground over here to from white to black. Now the numbers are over here. So with respect to Walmart, what I am expecting to see is for the prices to come into these areas of support, which is between 146, shall we say, in around 147. And as for the resistance, what I'm really looking at is really right on the top of this one, 153 to 152. Remember, this is Walmart, doesn't really move that much. It's all the moves are always very slow. Now to finish off, once again, we have a Twitter, and one more time, I will show you guys how to change the colors. If you have black, then background, go over here, change it to white. Foreground, which is on the side, we're going to change into black. But bullish candle, we're going to keep them in green. Bearish candles on the other side, we're going to change them into red. Again, bull candles, the color is going to be green. And the bearish candles, we are going to change them into red color right over here. And if you wanted to put your moving averages, you go to insert indicators, trends. Over here you have your moving averages. So first, obviously, your 100-day simple moving average is in yellow. That's what we had previously. That is okay. And then we go once again, we go to trends, and then we change into moving averages. Now we change this